Good evening, everyone. So, reaching to the conclusion of batch 4, auditing, done with 12 chapters, and now we're going to start the last chapter of your subject of audit, audit of special entities. Same here, Pooja. Last chapter of audit. So, okay, till I wait for the evening reverts, you've gone through 12 chapters as we discussed during when we started with the chapter of audit report. So what we discussed the whole chapters which you have been studying till those audit sampling, the basics of audit, and then we started applying the basics of audit, the techniques, procedures, everything on audit of financial statements, chapter 9. Then we moved to, after applying audit techniques on financial statements, how to apply them on the expenses, the income, the assets, the liabilities, everything in high-notch details. Then we moved to chapter 10, company audit, and specifically covers the auditing aspect of companies. Then we moved to audit report. This is almost, you were through, I suppose, 80%, 85% of the syllabus of audit. Then came the chapter of bank audit, and bank audit is a very, I would say, interesting chapter, and it is quite favorite among the article trainees studying the chapter of bank audit. Then in the last, after applying your audit principles on normal financial statements, companies, banks, we move to other forms of organization, all the miscellaneous forms of organization. And this is the chapter where you get to know how to apply audit techniques and how to conduct the audit of all other various forms of organization, be it a hospital, hotel, cinema hall, what are cooperative societies, and the government bodies, government audits, everything. So step by step, we have 14 forms of organization over here. We will be studying that if you have to conduct the audit of any such entity, what preparations you need to make, what points you need to consider, and the documentation requirements, the pre-planning, everything. I've still not received many of the rewards. Is it the last chapter, or I should ask how's the Josh? Only then you'll revert with hi, sir. The Josh seems to be thanda. I guess still preparing to join the class and everything. I always start the class at 6:05 or 6:07 so that everybody joins in till then. So chapter 13, audit of different types of entities. Let us start with some basics. Okay, these are the topics, as you can all see on your screen. These are the topics which we are going to cover in this chapter, and different types of entities are the topics of the chapter. So as you can see, we have sole trader, right? Okay, just give me a sec. Right, we have sole trader. Then we have this okay. Sole trader is sole proprietorship. We all know about it. Then firm is partnership firm. Okay. Then after partnership firm, we'll be doing LLPs, limited liability partnerships. We have cooperative society. Then NPOs. Okay, as I feel at end, audit is already good. That is good for you, Pooja. Really nice that you are in love with audit, because theory subjects, the students find them really hard. But it's really nice if you are finding practical intricacies in these subjects, then they become really interesting. Very good. Charitable institution, then the non-governmental organizations, government organizations, then we have educational institutions, hospitals, club, cinema hall, hotels, hire purchase and leasing companies, all these types of entities. So before we move ahead with our first topic, there are some common points, some general basic common points which you need to consider in every kind of audit, every kind of entity. Some common points you need to, you need to understand these points, because as I've told you many a times, that while you are attempting the examination of audit, the most common mistake committed by students while writing their answers is they write general answers to all the questions. If general answers could be accepted for all the questions, what is the need of the examiner to give you specific questions? Specific questions are asked because they require specific solutions, specific answers. Okay. If we keep on writing the general auditing, which we have read 2 times, 3 times, 4 times, obviously there is no point of getting good marks. If you write average, you get might be average or below average marks. So it is always, you should make a point that the common points are just there for understanding, and you have to derive specific points out of these common points. The common points over here, which you can see on your screen, these are the common points for the different kinds of entities we are going to study in this chapter. Okay, be it a sole proprietor, be it an LLP, be it a cooperative society, any kind of entity, some common points apply to every entity. You have to be well versed with these common basic parameters, then move ahead with this specific point. So there are some points which are specific to sole proprietorship. There are some points which are specific to cinema hall. There are some points which are specific to hospital. So you have to write those strong points instead of those points which can be written in any kind of question. Like what we call them is like aloo, which can be used with any sabzi, any vegetable. So you don't have to write points like common for every question. So here we come, audit of different entities. Major points, see, it says major points that must be kept in mind while performing the audit of educational institution, charitable institution, cinema, hospital, etc. So what are those major points? They are: the constitution of the organization is the first and foremost point. The constitution of the organization. This is the first and foremost point, that you need to understand what kind of organization, what is the constitution. Proprietorship, company, partnership, trust, government, NGO, what kind of constitution it has. So you can see on the left side, these points are literal. Let us shift to the right. I've just rotated the picture. So under constitution, you can see the first point. Examine the constitution of the organization, what kind of entity you are going to conduct the audit of. You have to examine the constitution. So I've already told you constitution is form, right? What it is? Form. Is it a company? Is it a firm? Is it a trust? What kind of constitution? Who are the governing members? What is the board, right? what are the powers of the board, all this stuff, right? Everything. Now, after you have examined the constitution, the next point is examine the bylaws. So what is the bylaws or rules and regulations of the trust deed? So under these organizations, the constitution is they are constituted under some laws, specific laws. If not the specific laws, the general laws, like the cooperative societies have their act, the government organizations, right? The corporations which are set up under different acts set by the acts enacted by the parliament. So apart from the rules which are applicable to them as per their act, there are bylaws which are set by them. By reading, by having a read of the deed, their constitution read, for example, the trust deed, we come to know about the bylaws. So bylaws are the laws further framed, the rules and regulations further framed by these organizations for their internal working. So then after examining the constitution, examine their bylaws or rules, then comes examine the powers of the members of the management and other officers who all are there in the board, in the executive committee, the employees, the officers, what are the various kinds of posts, what are their powers and responsibilities. Each step by step, first we entered the entity, we are understanding its constitution. Then what are the rules governing this particular entity? This is the entity. Enter the entity, examine the constitution, then bylaws, then members, right? And in the last, what do the members do? The members meet at various meetings. So with meetings, we come to the point of minute books of managing committee and members of the general meeting as may be. So general meeting, constitution, governance, the bylaws, management, their powers and responsibilities, and the minutes of their meetings. So these are the various points which you need to keep in mind as far as constitution of the organization is concerned. In every case, okay, be it an educational institution, charitable institution, cinema, hospital, is it a corporate form, proprietorship, partnership. So what are the other rules framed within the internal right? Okay. And then further, the second point, evaluate the internal control system. We have understood the structure, the constitution. The next point is the most important point, the internal control system. Third point, if you have understood the internal control system, so at this point of time, you understand what are the strength of the controls. Are they good, strong, weak, adequate, sufficient? The accounting policies followed, accounting records maintained. Check the various receipts of the organization in the form of fee, rent, income. These points will be doing in detail in every kind of entity. Okay, then expenditure and verification of assets and liabilities. So internal control, then accounting, then related to income, then expenses, last is assets and liabilities, the balance sheet. So this is internal, this is related to financial statements, and this is related to internal controls. This is related to constitution. So basically, constitution, internal control, policies, and points related to financial statements. 1, 2, 3, 4. And you can subgroup them further. The various common points. So these are the 4 kinds of common points you need to take care of in every kind of audit of any specific entity. Okay. Khushi, I've already discussed it. If you can zoom the screen from your end, or otherwise you'll be getting them in notes. Just understand these 4 things. Just keep them in mind: constitution, controls, accounting policies, and the elements of financial statements. Okay. So let's move ahead to our first kind of entity, the sole proprietorship. So what are we going to do? We're going to increase the complexity step by step. You have read about the various forms of organization in your commerce stream, +1, +2, graduation, if somebody is from direct entry or if they are undergoing. So these are all the various forms of organization. What you know already, we'll start with that and we'll proceed further step by step what I want you to know about the various other entities which are new for you. Okay. At first step, we'll start with the sole proprietor. So sole proprietor. Fine. This is your sole proprietor. Okay. This is your sole proprietor. Now, don't laugh at it. Huh? That's please bear with my drawing skills. So sole proprietor. So what do you feel a sole proprietor? What should and when in this chapter, when we're talking about audit, we are talking about the financial statements specifically. Apart from controls, the financial statements. So the financial statements of a proprietor, if you understand, we all have read about the business entity concept, that the business and the proprietor are different. The capital is what the business owes to the proprietor. You all understand the business entity concept? Okay. So sole proprietor, very simple. He is the person sometimes if it is allowed, if the sole proprietor has to get his if the sole proprietor has to get his accounts audited, it must be under some certain law. You will see in many of the cases it is voluntary on his part, unless and until required by some law. Then, so you all have read about it in the company audit chapter, and in the basics of audit, you appoint the auditor, then the engagement letter, and the auditor accepts it. Then they come to a contract with the terms and conditions of the audit engagement, everything. You follow every kind of step. So in this case, in the case of sole proprietor, the proprietor is the person who is the karta dharta of the business, right? He is the karta dharta of the business. So he is the one who will appoint the auditor, right? He will appoint the auditor, and terms and conditions will be set up between him and the auditor, him, her, and the auditor. The T&C relating to audit. Okay, all the remuneration, the rights, duties, unless and until governed by some law, the T&Cs can be set up between the proprietor and the auditor. Further, the scope of the audit, unless and until it is mandatory under the law, the legal scope would overtake the individual scope. Unless and until there is no legal scope, they can decide among themselves, between themselves, the sole proprietor and the auditor. So what is basically covered in sole proprietor's audit? You have done chapter 9, audit of financial statements. Exactly. On a smaller level, right? What do? You audit the profit and loss items, you audit the balance sheet items, the policies, accounting policies, and somewhat the internal controls. This is basically covered in the audit. You give your audit report and you have to tell me when the auditor gives an audit report in any case, what is the most important thing he should do? What is the most important compliance for the auditor? Anyone, please. What is the most important compliance on the part of the auditor while issuing any audit report at his end, be it sole proprietor, company, school, institution, or sorry, charitable institution, partnership firm? Most important part on the point, part of the point on the part of the auditor. Anyone, please. We did it while we started with the chapter of audit report. Very interesting topic on the part of chartered accountants, the auditors, which is mandatory for them to issue any audit report or certificate. And believe me, it is an important topic from examination point of view as well. So I'll wait for the answers. If somebody can assist me. Opinion to audit report mo dega hi. Opinion he'll be giving in his audit report. The audit report means opinion only. I'm talking about something related to compliance on the part of the auditor while issuing his opinion in the audit report or any certificate. A 4-year back concept introduced by the institute for all the chartered accountants. I'll not be giving more hints now. You have to be very much particular with that, but that topic. Anybody still? Yeah, right, Khushi. Good. It is not in the case of only companies or any other form, any kind of organization, be it a sole proprietor. Even if not governed under any law, the sole proprietor and the auditor set up the T&C of the audit, the scope of the audit between themselves. That doesn't mean auditor will not have to comply with UDM. This is a very important point and quite a big misconception among the CA students that if the T&C, the scope is not set under any law, whether UDN is required or not. That is why I had to bring up this point over here, that UDN is always required, any kind of attestation, right? Okay, so let us understand the sole proprietor. Okay, here we go. So a sole trader is under no legal obligation to have his accounts audited. The first point is clear, no legal obligation, sole trader. However, he may get his financial statements audited due to regulatory requirement. Yes, due to regulatory requirements, right? Yes, such as inventory brokers, specific instructions. Bank for approval of loans, etc. So I'll tell you one practical point. Sometimes what happens is the sole proprietors prepare their balance sheets, their books of accounts, everything completely fine, and they won't get them audited because even if they are covered under any law, they are covered under the parameters or the exemptions under which they are not required to get their, that they are covered within the limits under which they are not required to get their books audited. Okay, sorted. The proprietor doesn't get his books audited and he just files his income tax return. But when he approaches the bank for a loan, any kind of loan, home loan, or he or she is wanting to expand the business, and they require business limits or loans for construction of building machinery. So it is the bank which asks them, so please furnish us the audit report. And the sole proprietor says, I'm not required to get my books audited. Okay, sir, it is completely fine if you're not required to get your books audited. Please at least get these financial statements attested by a chartered accountant so that we come to know about the authenticity of these, that they truly represent your books. They are not window dressed, they are not fake, the figures have not been inflated or inflated as to suit your convenience, so that we may be able to grant you the loan. Okay, the sole proprietor comes to the chartered accountant, so we say if it is not an audit, then it is a compilation engagement. A standard. You have a standard on compilation engagements. If not in inter, you will be studying them. And final, I'll not discuss it over here to just put extra burden on you people just to remember that standard. Just remember there is a standard on compilation. You said you call it compilation engagement. What is compilation? Is that you compile the financial statements from the books of accounts and you give a disclaimer that this is not audited. You give not an audit report, but you give a compilation report as per that standard to the bank to tell them that, sir, we have not audited the books, we have just compiled them. Compiled them means you have converted the books into financial statements. Compiled whatever books the sole proprietor brought to us. And you give the compilation report, and yes, you require the UDN for this compilation report as well. So sometimes if the bank wants, we can give a compilation report, or otherwise, if the audit is completely voluntary, they can get their books audited within the allowed time. Auditor is appointed by the sole proprietor himself. Sole proprietor can determine the scope of the audit as well as conditions under which it is carried out. So scope completely determines the sole proprietor. I want to get this audit, and he might be wanting to get only the income part audited, that is called the revenue audit or the expenditure audit or anything. But it usually happens because sole proprietors get, or if they want to get their books audited, their financial statements audited, the scope covers each and everything. It is desirable that the contract of appointment of auditor in such a case should be in writing and should clearly define the scope of the work which the auditor is expected to carry out. Completely fine. Okay. Nothing written over compilation. Surbi, nothing written over compilation. If the appointment of the auditor is not in writing, the auditor should write to his client explaining the scope of his duties. So auditor says, since you have not given me anything in writing, the scope is not defined in writing, I must from my side tell you what would be my duties. So he will also state what would be the limitations, if any, placed upon him. Right? Okay. So he would say that this is my duties and I want everything in place. I want these documents, everything would be covered under my scope of audit, under my duties. And if any limitations would be placed upon my work regarding the information which I want to obtain from you, this would be the result. This is the most important point, and this is applicable in every case. In the case of change of auditor, This is applicable in every case, be the audit of any entity, the bank, if it is an audit, not compilation, if it is an audit, right? The banking, any entity, sole proprietor, partnership firm, company, it would be the duty of the incoming auditor. Incoming auditor means the new auditor, to communicate with the previous auditor. This was our proprietor. Okay, Mr. S. And our auditor was A. For the next year, Mr. S approaches B, a chartered accountant, to carry out the audit of his financial statements. So B is the incoming auditor and A would be the outgoing auditor. Okay. So in that case, when B accepts Mr. S appointment as auditor, he would write to A, the incoming auditor, who is B, will write to A, the auditor of the previous year, okay, communicate with him and will ask him to give an NOC, no objection certificate. This particular client has approached me to carry out the audit of his financial statements. I want to know if you have any professional objection to my appointment. So if A has any professional objection, not personal objection, professional, for example, the audit fees is pending, S has not paid the audit fee to A will tell B, my audit fee is pending, that is the only professional objection. Or anything important which A wants to bring to the knowledge of B regarding Mr. S financial statements. So it is a duty of B, any incoming auditor in any case, it is a duty of incoming auditor to always communicate with the previous auditor and get an NOC from him or her regarding the acceptance of audit of a particular firm which was audited by him or her the last year. Okay. So in case of change of auditor, it would be duty of incoming auditor. Who was the incoming auditor in our case? B. To communicate with the previous auditor. Who was the previous auditor in our case? A. Okay. Regarding the acceptance. These are the only points with respect to sole proprietor. Let's move to partnership firm. Okay, so our next case is partnership firm. So tell me some points with respect to, you are going to audit the financial statements of a partnership firm. What will you study or want to know about the firm initially? What would be the first step? I'm looking for the specific answer to my question. The first step, apart from the engagement letter and everything, we'll discuss as well that, but while auditing the books of a partnership firm, so what would be the first thing that you would be doing on the basis of common points which I have told you till now? We studied some common points. Good guys, good, very good. Partnership deed. And can you please tell me, in the case of a partnership firm, who will be appointing the auditor? Obviously, the partners agreeing among themselves, and the managing partner, or they may themselves, if all are managing or the working partners, they may appoint the auditor, the audit firm. right? They will appoint the auditor. Okay. So partnership deed, there would be various things which you will be studying in the partnership deed. For example, object, then object is the business, the partners, ratios, salary and interest, working, who is the working partner, who is the managing partner, everything. So you'll be studying all this in the partnership firm. A, B, C, D are the partners of this partnership firm, and X is the auditor. We all have studied partnership accounting, and we have to check how to apply the principles of auditing on accounting. We study accounting. See, accounting law. You have three subjects. So just let me take this. You have three subjects: accounting, law, and auditing. Okay. What is accounting? Accounting is the principles of accounting, standards, how to prepare the books of accounts. Preparing the books of accounts. Okay. What is law? Law provides the basis. How do you need to prepare the books of accounts? So law provides the basis to prepare the books of accounts. So accounting has its own sets of rules, standards, and policies. Law has its rules. So after studying the law, on the basis of this law, we prepare the books of accounts. And what does the auditor need to do? Auditor needs to have knowledge of both law and accounts, because he will check. What will he check? He will check whether these books of accounts have been prepared as per the law. So auditor needs to have the knowledge of both law and accounting rules and standards, because they will check these books of accounts whether they have been prepared as per the accounting standards and principles, and if they are compliant with the law under which they are governed. This is what audit is. So auditor has to be thoroughly well versed with the knowledge of Partnership Act as well. It is completely fine if there is no previous auditor, Surbi. If there is no previous auditor, no need to communicate. He can accept the appointment happily. So Partnership Act, again, why did he tell you Partnership Act? Because as an auditor, I need to check whether the partnership books, the firm's books are prepared and everything is being done in compliance with the act applicable. Okay. I suppose these are the basic things under the audit. I've told you the basic structure of audit. How is audit conducted? Audit is conducted on the accounts of any entity, the books of accounts of any entity, and to check whether the compliances of law have been done properly or not. So that is why to audit any partnership firm, Mr. X, the auditor will need to have the thorough knowledge of Partnership Act. Very much important. And finally is report. So here we go. What does it say? Appointment of auditors. Okay. The auditor to a firm, is usually appointed by the partners, either on the basis of a decision taken by them or to comply with the condition in the partnership agreement. So they may orally take the decision among themselves, having a word with each other, or they may put it in the partnership agreement, the deed, that will be appointing the auditor. This particular person or all the partners mutually will be appointing the auditor by this date. Very simple. His remuneration is also fixed by the partners. Completely fine. In the case of sole proprietor, the proprietor. The letter of appointment should clearly state the nature and scope of the audit, which is to be the nature of audit. Nature means what kind of audit you want. And the scope, what all things are to be covered. And if any limitation is there on the auditor, the scope would include the limitation. Sir, you have to carry out the audit of partnership or partnership firm, but this particular partner C, is not available for any questioning or any inquiry. He or she is out of India on a vacation or some vocation or some business professional work. So this is what we need to tell him, the auditor. In case of change of auditor, duty of incoming auditor to communicate with the previous auditor, we've done point. The auditor may particularly ensure application of accounting standards. So application of accounting standards prescribed by the institute. What is the institute over here? ICAI. So ICAI lays down accounting standards. ICAI is the only body to lay down accounting standards in India. Okay. For companies, Ministry of Corporate Affairs comes out with the accounting standards, but they are based upon these accounting standards only, which are issued by the institute. Done till now? यही किया हमने, that accounts are to be prepared as per accounting standards, and the auditor has to check the accounting standards as well as the provisions of the Act. In case the firm is a very important point, in case the firm is required to get its account audited under the requirements of any institute, any law. For example, the most common audit covered under an institute is the income tax audit. You might have read about it in your chapter of PGBP in income tax. What are the requirements for any kind of organization, be it proprietorship or firm, to get their accounts audited? Okay. If there is legal requirement to get the accounts audited, the auditor will qualify his report. If there is any non-compliance with any accounting standard, completely fine, because now he is under legal obligation. Alternatively, only disclosure of non-compliance with the accounting standards would be sufficient without making it a subject matter of qualification. Completely on the part of the auditor. He wants to mention the non-compliance or he wants to qualify his report. This is an alternative available to him as per the facts and circumstances of the case. So what are the matters which an auditor needs to consider before starting a partnership firm's audit? The name of the firm, the style under which the business shall be conducted. Style means all the partners would be the active partners, one of them, two of them. There is then a sleeping partner, nominal partner. Partnership is at will, or there is duration, right? The duration of the partnership. So this is what are the matters to be considered before starting audit. Now we are coming to partnership deed. Everything which is written in a partnership deed, which you consider while solving the questions of partnership in accounting, everything would be covered under this particular part. Matters to be considered before starting audit. Duration of the partnership, if it has been written in the deed as agreed upon, or if it is not written, it is at will. amount of capital that has been contributed by each partner, what part is fixed, what part is variable, the period at the end of which the books will be made, the accounts will be compiled, and the proportion in which the profits will be divided. Okay. And what would be the profit sharing ratio? Whether the losses shall be borne by the partners or whether any of the partners will not be required to do so. Okay, just tell me, do you know this fact that we commonly, what do? We commonly take as the profit or loss ratio. Okay. So we take it as profit or loss ratio. Profit sharing ratio. Is it mandatory? Since I'm asking you because you have been solving partnership question. Is it mandatory that losses would be borne in the same ratio? If I have a ratio of 3:2:1 in among A, B, and C, three partners A, B, and C, the profit sharing ratio is 3:2:1. Would losses be borne in the same ratio? Come up with your answers. Losses be borne in the same ratio, 3:2:1. Okay, Ria says it may be different. No, okay. Yes, Harsh, you're right. This is what is the most common point, and usually not many know about this. It is completely on the part of the partners. How do they agree? If they want to agree on the profits and losses, there are two situations. Either the firm could run into losses or it may make profits. It is completely among the on the part of the partners. If they want to share the losses in the same ratio as the profits, is fine. Or if they want the losses to be in a different ratio, or if any of the partners, they want to exclude, suppose they want to exclude over here B. Okay, B. If the firm makes losses, only A and C will bear the loss. B will not bear the loss. But in the case of profits, A, B, and C will share the profits in the ratio of 3:2:1. Yes, Kushi, completely right. So that is the thing, that you may have to consider this in the deed itself, or if not written in the deed, just inquire about this. Then the provisions as regards to the maintenance of books of accounts. How will the books of accounts be maintained? The matters which must be taken into account for determining within which accounts can be reopened for correcting or manifesting an error. How are the profits calculated? How are they divided? How are reserves created? How, if there is any provision for depreciation maintained, everything common. Very important. The rate at which interest will be allowed on the capitals and loans provided by the partners and charged on their drawings and current accounts. Four terms: capitals, partners' ownership in the firm, partner capital, and loans provided by the firm to the partner. or sorry, provided by the partner to the firm. So partner can lend money to the firm in two ways: capital, his stake in the firm, and she can provide also to loan to the firm. For difference, capital is withdrawable at any point of time. Loan has to be repaid. You might not withdraw capital; it might keep on getting accumulated in the books. But loan has to be repaid. So there is interest on capital as well. You have read about it in the Partnership Act, as well as in your accounting and in the tax PGBP chapter as well. There are limits till which interest can be provided on partners' capital, the loans provided by them. Then, if the partner has taken a loan from the firm, what would be the rate of interest and the rate of interest charged on the drawings? We have done these questions in accounting. The partner withdraws this much money at the beginning of the month, middle of the month, last of the month. So what would be the interest charge? We have done these questions in accounting. Whether any salaries are payable to the partners or withdrawals permitted against share of profit, to what extent? What are the duties of all the partners, specifically individually all the partners with regard to the management? Whether there is sleeping nominal partner and who all are the managing partners, who will be managing the business, who shall operate the bank account of the firm. This is very important. Who shall operate the bank account? It has to be written in the partnership deed. The bank account shall be operated jointly. Signature of two required, one required. How are you going to operate the bank account of the firm? If there are any surplus funds available with the firm, how should they be invested? FDs, purchasing of joint life policies by the partners, anything. How are you going to invest this? Because as an auditor, I will check it as per your agreement, whether the surplus funds have been invested accordingly or not. Then the rights and powers of the partners, any limitations and restrictions on their rights and powers on any specific. A and C are going to work in the firm. B is a silent partner. So B will have access to the books of accounts only at the end of the year. And what are their powers and duties? Who has got the implied authority? Implied authority means if they are working on behalf of the firm. They represent the firm. To pledge the firm's credit or render it liable. What does that mean? To pledge the firm's credit or render it liable. They have the implied authority to take decisions on behalf of the firm regarding any loans, any liabilities, any assets the firm has created or any obligations of the firm. So as an auditor, I need to know about this. So what are the advantages of audit of a partnership firm? This is the most asked question in your exams till now. Advantages of audit of a partnership firm. These are the 5 points. I'll not take much time over it because very simple. Disputes. In the case of disputes, when the partners reach the court, there is a dispute among the partners. So every time audited accounts are the best proof because they have been attested, they have been checked by a chartered accountant, a professional who is expert in this field. The courts, the arbitrators, the mediators rely upon the audited set of accounts to check what is the balance due to a partner or from a partner. At the time of dissolution, because at the time of dissolution, suppose A, B, and C are partners. Sorry. Okay. So we have A, B, and C as partners. right? A, B, and C. They are the partners. C wants to retire. A and B will be the only partners remaining. So C wants to settle his accounts. Settle accounts, we require audited books because C, there is a dispute between A, B, and C. C says, the firm owes me 10 lakh rupees. And A and B say, no, the firm owes you 8 lakh rupees. They might get their books of accounts audited by the chartered accountant to come to a settlement point that yes, this is the final figure. A third party, the professional, the chartered accountant who is expert in his field, he'll audit the accounts and come out with the final balance payable to C, which they have calculated whether it is appropriate or not. Okay. Then reliability. So obviously the audited accounts are reliable. They are reliable because they have been attested by a chartered accountant. Audited. Who rely upon these? The stakeholders, the banks when they advance loans, purchasers of the business because they have to give their stock on credit, and it is also an evidence of the profitability of the concern and its financial position. So under income tax as well, the government wants to see the audited accounts attested by a chartered accountant that yes, the taxes paid on the basis of profits seem to be genuine because they have been attested by a chartered accountant. So when you want, if A and B have retired, a person D wants to, C has retired, a person D wants to enter into partnership with A and B. So for admission, they'll calculate goodwill. What part of goodwill do A and B want from D to make him enter into partnership with them? So for the calculation of goodwill, we require the financial statements of previous years and audited financial statements. Might be audited financial statements would definitely be accepted by B to form the base for calculating goodwill. Control. So the auditor offers his or her suggestions to the firm where the controls are weak, what is going wrong, you are charging wrong interest, you are giving interest above the limit to the partners, right? So any undue advantage being taken by a working partner, suppose AB are the only working partners and they might take undue advantage in the firm at the cost of C's interest. So if the audit is carried out, right, the auditor may be able to find this out and tell C that this is where the firm's business, the managing affairs are going wrong. So these are the points which are the advantages of audit of a partnership firm. Special points we have already covered. The appointment of the auditor by partners. We have to check the partnership deed, constitution, and we have to check whether the deed has been signed by all the partners. And if it is registered, there is proper registration certificate with the registrar of firms. It is not mandatory for a partnership firm to take registration. It is only voluntarily to be decided among the partners themselves. Then the minutes book, the partners, when do they meet, what are the minutes of their meeting, what do they decide? An auditor has to take care of each and every part. The objects of the firm, the partnership firm is doing the business which it intended to as per the deed, verifying the business. It is authorized by the partnership agreement. Then the books of account, we have to examine the mutual interest. What is it? That the interest of no partner has suffered prejudicially. What does prejudicially mean? Prejudicially means against the interest of someone. Prejudice means against the interest of someone. So it is against the interest right? Any activity which is being carried out in the firm is against the interest of any particular partner. So there is mutual interest, mutual faith. You have read about the term fiduciary capacity. If you had read about Partnership Act, fiduciary capacity, okay. Then for tax provisions, completely fine. The tax provisions. So partnership firms, the audited firms, the audited profits, they form a base for calculating the tax provision. Then division of profits among the partners. Quite common points, special audit points in the audit of a partnership firm. Okay, so sole proprietorship and partnership was quite simple. The concept of LLP. What is LLP? Limited liability partnership. In the partnership, the liability was unlimited because after the firm's assets were not sufficient to discharge the liabilities of the firm, the partners would be liable. So the concept of this unlimited. But there were not too many compliances and it was somewhat an easier form of organization. Then there was this company form of organization where the liability was limited. The shares you have subscribed for limited to the value of the share. We all know about this. The features of company, limited liability, but there were too many compliances. People would not usually form a company. There they had free hand on capital contribution. They could contribute capital, they could withdraw their money, they could give loan, take loan. So quite easy with the partnership, but there was unlimited liability. So each form of organization had their pros and cons. In the year 2008-9, India came up with the concept of LLP, Limited Liability Partnership, which was a hybrid form of company and partnership. It was the hybrid form of company and partnership. The positive features of both the forms considered and Limited Liability Partnership Act was passed to give birth to a new form of organization, limited liability partnerships, completely governed by a new law. And something new to tell you, that Ministry of Corporate Affairs, its website, and they take care of the company compliances and LLP compliances. We will study about various forms to be filed by LLPs and all. They are filed at the website of MCA, Ministry of Corporate Affairs. And to whom they are filed? Registrar of Companies. Like we have registrar or firms, ROFs. Registrar or firms, for partnership firms, we have registrar of companies. And the same registrar of companies take care of LLPs. We'll study about this when we'll study about LLP. I hope the concept of LLP is clear to everyone. LLPs are the hybrid form of organizations which take their features from both partnership firm and company which weed out their limitations and take care of all the advantages a partnership firm has as well as a company has. So, what are the distinctive features of an LLP? LLP is an alternative form, alternative corporate business form, alternative corporate to companies, that gives the benefit of limited liability of a company and flexibility of a partnership. So limited liability, I told you that no one can come to your home to discharge the debts of a company till beyond the amount of the shareholding. But in the case of partnership, the partners, right, they have the unlimited liability. The partners would have to bring money from their homes to discharge of the debts, if any remaining, and if the assets of the firm are not sufficient to discharge those debts. So, limited liability of a company, but flexibility of a partnership. In company, you cannot contribute capital so easily or withdraw money so easily. You have to pass resolutions, you have to raise capital, you have to issue shares. So it's kind of something very complex, time consuming. That flexibility is not there in the case of a company, which is there in the case of a partnership. I want that flexibility and limited liability as well. I want laddu in my dono haath. Dono haathon mein laddu. So the government gave me laddu in both the hands with the concept of limited liability partnership. The limited liability of a company and the flexibility of a partnership. So a limited liability partnership known as LLP combines the advantages of both the company and partnership into a single form of organization. LLP is governed by the Limited Liability Partnership Act of 2008. Whenever an year is written with the act, that means the act was passed in that year, which has come into force with effect from April 1, 2009. Okay, so it came into force from the date April 1, 2009. The date as enshrined in the act that this act will come into force in the year from April 1, 2009. The Indian Partnership Act. The Indian Partnership Act is not applicable to LLP. So if there is an LLP, the LLP Act is applicable. No relation with the Companies Act or the Partnership Act, irrespective of the fact LLP derives its features from both partnership and company. It has its own parent act, the LLP Act. No relation with Partnership Act or the Companies Act. LLP is the body, incorporate and a legal entity separate from its partners. These are the features of which are like the company form, having perpetual succession, like we have in the case of companies, can own assets in its name, sue and be sued. The partners have to write the business and manage business directly, unlike corporate shareholders. So what happens in the case of companies? The owners and the management are different. In the case of company, the shareholders own the company, but it is managed by the directors, the managing director, the board. In the case of partnership, the partners themselves are the owners and they themselves manage the business. So the management and the ownership is one and the same in the case of a partners, the same persons. But in the case of a company, the persons are different. In the case of LLP, the partners have the right to manage the business directly, unlike corporates. So in the case of company, the shareholders cannot interfere in day-to-day working of the business. It is a duty of the board, the directors, the governing board. But in the case of an LLP, it carries the features of both partnership and companies. So the partners can directly engage themselves into the business of the LLP. Okay, next point, very important. One partner is not responsible or liable for another partner's misconduct or negligence. Unlike in partnership firm, there was principle of mutuality. Unless otherwise proved, the partners were equally and severally liable for the acts of each other under a partnership, unless otherwise proved. But in this case, one partner is not responsible for another partner's misconduct or negligence. Minimum of two partners are required to form an LLP, and there is no maximum limit on the number. The rights of duties of partners is LLP is governed by the agreement between them, and they have the flexibility. They can devise means prepare the agreement accordingly as per their choice. This is called the LLP agreement or LLP deed. Duties as provided in the LLP Act would be considered for, and this is the most important point. At least two partners should be the designated partners. There is a post. This post is known by the name of designated partners. So if there are only two partners, they both have to be designated partners. If there are five partners, any two or more than two can be the designated partners. If they all want, they all can be the designated partners. But at least two partners should be designated. Designated means they are like the working partners in the case of a partnership firm, the managing partners. Here the term is designated partners, on whom the notices will be served or who will be the caretakers who will be working the day-to-day affairs. And these designated partners, not other partners, the designated partners, they will be under an obligation to obtain DPIN, designated partner identification number. What is this DPIN? Okay, so in the case of a company, you might have read that in the case of a company, a director requires DIN. What is that? Director identification number. Director identification number. What is this? Like under the income tax law, you need to have the PAN. The PAN is your identity with the income tax. You can have only one PAN. You cannot have two PANs. The same way, when you are a director, this is the identity given to you, the DIN, the director identification number. With this number, the government is able to identify you as a director, and you are a director in how many companies. This is the only number which you have to quote in all the companies. You need not take DIN for every separate directorship in every company. There is one DIN applicable to all directorships, whether you are director in any number of companies. This director identification number remains the same. And this is applied on the website of MCA, Ministry of Corporate Affairs. Like PAN is applied on the website of Income Tax, this number is applied on the website of MCA, Ministry of Corporate Affairs. It maintains the data of all the corporate firms, MCA. So this is director identification number in the case of a company. Same in the case of LLP. I told you MCA is the governing body. MCA is the compliances are done under MCA. So the DIN transforms into DPIN, designated partner identification number. Designated partner identification number. Again, under MCA, because you need to have one DPIN, you may be designated partner in one or more LLPs, but the MCA identifies you with this DPIN. Okay? So this you have to apply at the website of MCA, and this is your identity number to quote everywhere if you are if you require DPIN in case of an LLP, and then in case of a company, and the data is maintained with MCA. Okay. Now I'll give you a situation. There is this person A. Okay, let me change the color. There is this person A. Okay, he is a director in a company, and further he becomes a designated partner in an LLP. This is something which is just giving you food for thought. A person is already a director in a company, he's having a den, and then he becomes a designated partner in an NLP newly formed. Does he require a deepen? Food for thought for you. Does he require a deepen if he's already having den as a director of a company? Yes, please. Cinema, that depends upon the agreement between them. Okay, okay. So this is something which is quite practical. You will get to see this when you, some of you might have started their articleship training. Some of you might be starting it after your attempt. So if a person already has then, he need not apply for a deepen. Active den. If already has an active den, he need not apply for a den. The same works in the case of LLP as well, because they are maintained by MCA only. Under one parent organization, you do not require two different identities. If you're already registered with them with a DIN, you do not require a DPIN. It is required for a person completely new to MCA who has never been a director, and currently he's applying, he's a designated partner, so he needs to apply for DPIN. Okay. So only a person who is new to MCA will require DPIN. If he already has a DIN, it will serve the purpose in case of LLP as well. No two different identities required for the one and the same person. Not to make life more complex. It is already very complex. Okay, let's move. So rules regarding accounts, audit, and returns of an LLP. An LLP shall be required under maintain annual accounts reflecting true and fair view of its state of affairs. Okay, LPs are required to maintain books of accounts, quite obvious, which shall contain particulars of all sums of money received and expended by the LLP. So particulars of all sums of money, where did the money come? Capital contribution, income, expended, withdrawals, everything. In respect of which receipt and expenditure take place, all the outflows and inflows, a record of assets and liabilities of LLP, quite obvious, statement of costs of goods purchased, inventories maintained, work in progress, finished goods, cost of goods sold, any other particulars which the partners may decide. Quite obvious. Now, the second part, and mark it very, very important for your correct, incorrect questions or your MCQs. This is very important for your MCQs and correct, incorrect type of questions. There are some returns which an LLP, see, MCA is that form, that leg of the Ministry of Finance, that department, which has been given the responsibility of overlooking the working of corporate form of organizations. How can the authorities, the people from the government over there at MCA, they cannot go and check every LLP at their place, every company at their place. They'll be requiring huge manpower, and it is not at all feasible every point of time. So how was the teacher in our school, a lecturer in our college? They were assured that we are doing good. Our parents were assured that we are doing good. Quarterly, half-yearly, weekly, monthly tests that yes, your ward is doing good, is doing decent, you need to work upon this and that. In the same way, MCA has come out with a host of forms and returns, which it requires the companies and LLPs to file during the year or after the close of the financial year. So in the case of companies and LLPs, there are various forms. For example, you want to raise share capital, you want buyback, you want director, addition of a director, right? Appoint a new director. Everything requires a proper resolution, and some particular and sensitive topics require filing of forms with MCA. This is the major change we are bringing in our company. MCA says, okay, this is the form, fill it and file it with us. We'll maintain it in our records, and that will be the final record till the time you next want to get it edited. So how do we make MCA aware of the changes we are bringing in our organization, in our company or LP? We file various forms. That is one thing. Now, relating to our working, our financial health, whether we are doing, because corporate form and MCA is the body which takes care of corporate form of organizations in India. Government has given this responsibility to MCA. So MCA has come out with various forms which are to be filed half yearly or yearly by these corporates, so that MCA can get a glimpse of the working of these organizations. What is happening? Are they doing good? Are they working properly? Are they complying with the laws? So these are known as returns, which we need to be filed, which need to be filed with the MCA as per their time. So what are the returns applicable to LLP? There is a statement of accounts and solvency. The format is given by MCA. MCA lays out the format, like the format of income tax return is given by the income tax department, the forms. In the same way, the MCA comes with these forms. What is the number of the form? Form number 8. So this is a statement of accounts and solvency in form 8 that shall be filed by every LLP with the registrar. So here the registrar is ROC, Registrar of Companies, which shall be filed by every LLP with the registrar every year. Every year means annual form. So form 8 is an annual form, and it relates to statement of accounts and solvency within a period of, now comes the time limit, 30 days from the end of 6 months of the financial year to which the statement of accounts and solvency relates. For example, the statement of accounts and solvency relates to financial year 21-22. So within a period of 30 days from the end of 6 months. 6 months end on 30th of September, right? And further a period of 30 days is 30th of October. So if everything is normal, there are no extensions due to COVID or anything else like has been happening in the past 2 years. So normally every LLP shall file this form 8 within a period of 30 days from the end of 6 months of the financial year. When the financial year ends, you have to file form 8 relating to that financial year. 6 months come by, and after 6 months time is gone, within a period of 30 days from the end of 6 months. So it is not required that you have to wait for those 6 months. You can file it anytime, but the maximum limit is 30 days from the end of 6 months of that financial year, from that financial year end. So what does this contain? It contains a declaration on the state of solvency of the LLP, how strong the financial health is. Is it doing good, the LLP? It is not running into losses. Okay. So it is not running into losses on the state of solvency of the LLP by the designated partners, and also information related to statement of assets and liabilities, statement of income and expenditure of the LLP, basically the profit loss, the balance sheet, and the solvency of the LLP, right? Whether it is doing good, it is strong enough, the ratios are good, solvency ratios. Now the second form, every LLP would be required to file annual return. Annual return, right? So annual return in form 11. So form 8 is statement of accounts and solvency, and form 11 is annual return. Within 60 days of close of financial year, within 60 days of close of financial year to which it relates. And these forms are available for public inspection by payment of prescribed fee to the registrar. So when you file these forms, with the registrar, these forms are available on public forum, and anybody can get access to these forms, your balance sheets, your financial statements, your annual returns, after making payment to the registrar that I want to see the forms of this particular LLP or registrar. You just create an account on the MCA website, you make the required fee payment, and you have to state the number, the name of the LLP or the company whose particular documents you want to inspect. You pay the fee and they are made available to you in your account on the MCA website after successful payment. So be careful with form 8 and form 11, very important for correct, incorrect and MCQ questions. Okay. Now the audit of LLPs. So accounts of every LLP shall be audited in accordance with Rule 24 of LLP Rules 2009. Like in the case of companies, you have the company's rules relating to different subject matters. You have the LLP Rules 2009, and the Rule 24 of these rules asks for the audit of accounts of every LLP, which provide that any LLP whose turnover in any financial year does not exceed 40 lakh rupees, or whose contribution is the capital, does not exceed 25 lakh rupees, is not required to get its account audited. So what does it say? There are two limits, right? In the case of an LLP, you have a limit on sale. The limit on sale, right? The limit on sale is 40 lakhs, and the limit on capital contribution is, sale is less than 40 lakhs or capital contribution is less than 25 lakhs. Audit is not required. So the turnover does not exceed in any financial year 40 lakh rupees, or contribution does not exceed 25 lakh rupees. They are not required to get their accounts audited. But if the partners want that no, even if it is not required, we fall below the limit, we want our accounts of the LLP to be audited, they can get the accounts of their LLP audited. And even if it is a voluntary audit, audit will be governed by this rule. That doesn't mean if it is falling below the limit and the partners, designated partners themselves want that we want to get the audit conducted voluntarily on our will, even then the rule 24, any terms and conditions, the scope decided under this rule will be governing the audit. Okay. So sale is less than equal to 40 lakhs and capital less than equal to 25 lakhs. Once it exceeds, either turnover exceeds 40 lakhs or contribution exceeds 50 lakhs, 25 lakhs. So these are the rules regarding accounts, audit and returns. We are done with 3 rules: accounts, returns and audit. And we further have 3 more rules. We'll be doing that, resuming that after a break. So let's take a break of 15 minutes. So we'll be back 7:45. At 7:45. It's 7:31. We'll be back by 7:45. Okay? चलिए. Okay, everyone, we are back after the break. Just give me a sec. Just give me a sec, people. It's giving me some problem. Just give me a minute. Okay, it's fine now. So let me clear this to you, people who are finding it difficult. Okay, so let's make a timeline. Okay, so here we go. So this is just a representation I'm taking. This is April 2021 and the year ends on March 2022. This has nothing to relate to any extension in due dates, anything. Okay? Okay, subject to that. And let us go. So we have April, May, June, July, August, September, October, November, and then we have December 2022. Done? So we have, so this is the point, the end of the financial year 2021-22. So we have Form 8, Statement of Accounts and Solvency. What does it say? 6 months from the end of the financial year. So my financial year ends over here, 31st March, 1st April. So 1 month, 2 months, 3, 4, 5, 6. 6 months from the end of the financial year is 30th of September. I've reached this point. Now, Form 8 has to be filed within a period of 30 days after the end of 6 months from the end of the financial year. From the end of the financial year, 6 months. And after this, again, 30 days are being given to me to file Form 8. So my due date falls over here, right? It is 30th of October. That is Form 8. Now let's come to Form 11. मेरा पेन सब भी जितती है. Okay. So Form 11, what does it say? 60 days from the end of the financial year, you have to file Form 11. That is annual return. End of financial year वही है हमारा. So same 60 days. Okay. 30 days, 60 days. So Form 11's due date is 30th May. Form 11's due date is 30 May and Form 8 is 30 October. Some people are writing November, some people are writing September. Now I hope it is clear. Due dates for Form 8 and Form 11. Am I clear? Please revert so that we can proceed ahead. Okay, the limits. Yes, the limits of audit. So the limits are 2. What are the limits? You're not required to get your accounts audited if the capital contribution is less than 25 equal to 10 lakhs. That is the capital, and the turnover that is less than equal to 40 lakhs. Okay? Or even if one of the condition is violated, your turnover crosses more than 40 lakhs or the capital gets increased to more than 25 lakhs, you have to get your books audited. That is what the loss is. And this is the limit under the LLP Act. LLP Act, not Income Tax Act or something. Income Tax Act has its separate limits. 1 crore, 2 crore, 5 crores, 8% profit, 44 AD and everything. That is completely different. This is the limit under LLP Act, and the audit we are talking about here is the stat audit under the LLP Act. ठीक है? Okay? चलिए. Rules regarding audit and returns. इसमें fourth point we have is the powers of the registrar. Registrar has the power to obtain whatever information the registrar requires for the purpose of carrying out the provisions of this act, compliances from any designated partner, any partner or employee of the LLP. Registrar can ask for information from any of these. He would also have the power to summon. Summon means send them a legal notice, to call them or to ask for any information which they want. Any designated partner, or employee of any LLP for any purpose, if the registrar is not satisfied with whatever information has been provided to him till now. What are the documents available for public inspection? The following documents are available, and if you want to go there and inspect them, the inspection fee is ₹50. And if you want a certified copy or extracts from any document, that should be ₹5 per page. The incorporation document is how was the LLP incorporated, the document of birth, incorporation document, names of partners, any changes, statement of account and solvency and annual returns. It has been provided that in case LLPs file relevant documents after their due dates, with additional fees up to 300 days, no action of prosecution will be taken against them. So due dates pass by, and after 300 days, till 300 days from the due date, they can file their forms with late fee, additional fee, late fee. Okay, they can file their forms with late fee. Just a second. Okay. No action of prosecution. What is prosecution? What is prosecution? Carrying out trials, court trials. Okay, court trials. Okay. So no action of prosecution will be taken against them. But if the delay is of 300 days or more, the LLPs will be required to pay normal filing fee, additional fee, and there are chances of getting prosecuted. The partners, the designated partners and all. Okay. Then comes the act also contains provision for compounding of offenses which are punishable with fine only. Some offenses which are punishable with fine only, there is compounding of offenses. Okay, I want to know what is the meaning of compounding. Please tell me. What is the meaning of compounding of offenses? Let me see how many of you tell me. What is the meaning of compounding of offenses? Waiting for your answers. Combining. Some more answers, please. What is compounding of offenses? Okay, done. Let's do one thing. This is a homework for you. I am not getting many of the answers. So while we start with the next class day after tomorrow, the first thing we'll be discussing is what is compounding of offenses, what is prosecution. These are some basic legal terms. You should be knowing about it. I'll tell you only first, you'll discuss it with me. Okay. Some people are coming up with the Google version. Okay, so this is a food for thought, and this is a homework for you. You guys will have to remind me at the start of the next class that we have to discuss about what is prosecution and what is compounding of offenses. Okay, let us keep this for the next class. I want you people to tell me. Then will discuss it with you. Chaliye. Appointment of auditor. The auditor may be appointed by the designated partners. Remember, the auditor has to be appointed by the designated partners of the LLP at any time for the first financial year, but before the end of the first financial year. So anytime this is your first year, new LLP has been incorporated first year, the first financial year ends at 31st March. So anytime anytime before the end of the first financial year, the first auditor can be appointed, right? At least 30 days prior to the end of each financial year, other than the first financial year. So from second financial year onwards, if you have to appoint an auditor for the LLP, that has to be appointed at least 30 days prior to the end of each financial year. Financial year ends at 31st March, 30 days prior, before 30 days, by 1st of March, you should have appointed the auditor. To fill the casual vacancy, please bear with me on the spelling of this casual. And to fill the casual vacancy caused by removal of auditor. So the auditor himself vacates the office, then the casual vacancy is created. If the auditor is removed by that designated partners from his office, then again casual vacancy is created. The designated partners, in any of these four cases, the designated partners may appoint the auditor of the LLP. Okay. If the designated partners fail to appoint the auditor, that doesn't mean auditors are not appointed and audit is not carried out. Then the partners may appoint the auditors. If the designated partners fail to appoint them, then the partners then come into action, come into the scene, and they can appoint the auditors. Fine. Again, advantages, purpose, need of audit of an LLP, very simple: detection of errors, dispute, reliability, better compliance and management, and in settling accounts between partners on reconstitution, the same as that of the partnership. Almost similar. You can go through them, you can have a read. So what is auditor's duty regarding audit of LLP? Very simple. The first part is engagement letter. He needs to get definite instructions in writing as to the work to be performed. Then minutes book. If the partners maintain minute book, he shall refer to it for any resolution passed regarding the accounts, because he's auditing the accounts. Then he should read the LLP agreement and he shall note the following provisions: nature of business, amount of capital, interest provisions, duration of the LLP, then drawings allowed, salaries, commission, borrowing powers of the LLP. What is borrowing powers? How much, to what extent the LLP can borrow from the market, from the lenders, from the banks, as decided among the partners. Rights and duties, method of settlement of accounts between the partners at the time of admission, retirement, death. These were separate chapters in our accounting syllabus. admission, retirement, death, reconstitution, any loans advanced by the partners. Finally, the reporting by the auditor. Auditor should mention in his report whether records appear to be correct and reliable, whether he was able to obtain all the information explanation necessary for his work, whether any restriction was imposed upon him. Okay. So till now, we covered the common points, the sole proprietor, the partnership, and the limited liability partnership. Fine. Any doubts still here? And we move ahead to last topic of today's session. Please come up if you have any doubt till now. तुम लोग अभी तक कंपाउंडिंग पे अटके हो. We'll discuss compounding and prosecution in next class. Let all students read about these words, because these are some words which we bypass while studying for our subjects. We just cram them. Prosecution, compounding, right? Bailable, non-bailable, non-compoundable offenses. What is prosecution? So we'll discuss these terms in the next class. Let all people study about these terms. Just a 5 minutes topic for some practical knowledge. Okay, any doubt till now? Apart from this compounding and prosecution, otherwise we move ahead. Designated partner, Pooja, designated requires deepen. Designated partner requires deepen. Okay, if you have never been a director in a company, you don't have DIN, director identification number, or it is inactive, whatever be the case, you are completely new to MCA. How can you be well versed with MCA? Either you have been a director in a company. If you have never been a director in a company and you don't have any identity with MCA, then and for the first time you are entering into a relationship with MCA through the limited liability partnership, then as a designated partner, not if you are a normal partner. If you are a designated partner, the designated partner requires deepen, because it is through designated partner only that communication between the LLP and MCA will be established. So to identify a partner as designated partner with any LLP, the designated partner needs to apply for DPIN, designated partner identification number. Like director identification number, same way direct designated partner identification number. If a person already has DIN, he has been or is currently serving as a director in a company, then his relationship is already established with MCA in the form of DIN. He already has an identification number with MCA, and he becomes a designated partner in any LLP as well simultaneously. Then he or she does not require to apply for a DPIN, because he already has an identification number with MC, that is the DIN, that will work for LLP in his or her case specifically as well. It is required for new people only. Okay, Surbhi, compilation audit. Audit is completely you check the books of account as per some law. As per a relevant law, you check the books of accounts in detail, the financial statements, the expenses, the income. It is an audit. Audit is simply you apply the provisions of the law, the basic principles of auditing, your professional judgment and skepticism, everything, right? Your questioning mind and all. That is audit. Compilation is just simply like the person, the client brings his books to me and documents and information which I require. I compile them from his books of accounts. He prepares a balance sheet and profit and loss. That is called compilation. It has separate standard to it issued by the Institute of Chartered Accountants of India. It is known as compilation engagement. It is not an audit, but a compilation engagement. You'll get to read about it in your CA finals. What is a compilation engagement and how does a chartered accountant carry out this engagement? It is not an audit. It is just a rephrasing, rewriting of the books, the financial statements of the client, and only some particular rules are govern this compilation engagement as per that standard. You'll get to read about it in your CA finals. Currently, it is, I suppose, it is not in there in your syllabus. Okay, let's move. Okay, tell me, in Swachh Bharat Abhiyan, so when rankings are carried out, which city has been constantly bagging the cleanest city of India in the recent years? The cleanest city of India in recent years. When it comes to rankings of different cities of India on the basis of cleanliness, hygiene, Swachh Bharat Abhiyan. And no, Miss Bhatia, no. It might be the greenest. Anybody with a different answer? The cleanest city? Yes, Ria. Now you go. Goa is a state. What are you doing? Sandhuji, Goa is a state. City, Indore. And our local bodies, the municipal corporations, these bodies are responsible, the corporations, the councils, these are the bodies responsible for making it possible. These are the bodies which have been given the task, this task of maintaining the cleanliness of the cities, right? The municipals. So this is our topic. The next topic, local bodies. So what are local bodies? A municipality can be defined as a unit of local self-government in an urban area. Indore is the right answer. Indore in Madhya Pradesh. Okay, so local self-government in urban area. So what do we mean by the term local self-government? Which administer the working of a locality. It could be a village, the panchayats, the town, the city, or any other area smaller than a state, whereby they constitute a body. That particular working body represents the local inhabitants, possessing fairly large autonomy, raising at least a part of its revenue through local taxation. The local water and sewerage bill, the property taxes and all, and spending the income on services which are regarded as local and therefore distinct from state and central services. So you have government at the center, you have government at the state, and then when we say gali, mohalla, society, ward, your municipal councillors, and they make up the local body of municipality councils or corporations. So municipal government in India covers 5 distinct types of urban local authorities. We have the municipal corporations, the municipal councils, the notified area committees, the town area committees, and the cantonment committees. As far as the nature of different areas is concerned, and based upon the size of that particular area, the city, the town, So these are classified as this: corporations, councils, and all. The most common are, which we understand, are the municipal corporations and the municipal councils. So their taxation powers, usually most of the taxation powers are vested with the central government and the state government. So their taxation powers are confined to a few items and are of a generic compulsive nature. Compulsive nature means not voluntarily. You'll have to pay it. If the property taxes are due, you'll have to pay it. If the water and sewerage tax is there, you'll have to pay it. Okay. So taxation power of municipal corporations. It is talking about municipal corporations, one kind of local body. We have discussed 5. So for the corporations, few items, generally compulsive in nature. For other types of local bodies, they have a wider range, optional in nature and subject to a procedure on their imposition requiring final sanction of the state government. So in the other 4 cases, they'll have to apply to the state government. Okay. So imposition requiring the final sanction of the state government. Fine. So the municipal corporations, they have few items which are covered under their taxes, and usually they impose taxes on the local people, which are compulsive nature. The 4 other types of local authorities, they have a wide range of taxes and they have to take sanction from the state governments for imposition of such fees and levies. What are the major sources of revenue? Property taxes and octroi. Fine. Other taxes are profession tax, non-mechanized vehicles tax, taxes on advertisements, taxes on animals, and these are all examples. Tolls, show tax vary from area to area. The municipal authorities, these local bodies, they have 3 kinds of function: regulatory, maintenance, and development. Regulatory is with relevance to compliance, law and order. Regulatory is regulate the functioning of various local bodies, the departments which fall under local bodies. Maintenance is whatever has been done to maintain it, and developmental is to carry out new developmental works. The road in your street, society, ward, that is developmental. To maintain it, planting trees, making a note of the corrective actions that need to be taken for the buildings, for the roads. These are all maintenance activities. So expenditure that is usually incurred by municipals and corporations can be broadly classified as general administration and revenue collection. They incur on public health, your district hospitals, public safety, right? Installation of street lights and everything that is covered under their working scope. Education, public works, the water works, the sewerages, others such as interest payments, etc. Quite normal, quite obvious. We are just concerned with the audit of local bodies. Don't feel insecure if you are not able to understand any of these things about local bodies. Just give a read from your module. If you're not able to understand, in the next lecture, in the starting 5 to 10 minutes, I'll be taking up doubts only, and then you let me know. Okay, fine. That what you didn't understand. Okay, the various types of grants. Grants is helps, financial aids received from the state government to local bodies. They make reports, they send it to the government, they get sanctions from the government, not those sanctions which US is imposing on Russia. No, sanctions is allow permissions to them to use money from the state funds. They are given money from the state funds. So there are three types of grants. General purpose grants. What is general purpose grants? That is to bridge the gap between the needs and the resources of the local bodies. They want to implement some works in their area, in their council, general purpose, to bridge the gap. Their budget is 10 lakhs and they have rupees 8 lakhs only. So a general purpose grant would be given to them. You can use it to bridge the gap of 2 lakhs to carry out various regular maintenance and developmental activities. Installation of lights, some camps to be organized, maintenance of roads, anything to be utilized for general purposes. Specific purpose grants. What are specific purpose grants? These grants which are tied to the provision of certain services or performance of certain tasks. For example, in the COVID period, lockdown period, specific grants were given for ensuring access to basic facilities to their, I would say, the citizens. Specific purpose grants given. For example, the construction of a clinic or a hospital or a particular water treatment, waste treatment plant, anything. These are specific purpose grants. We all understand the difference between general purpose and specific purpose. Statutory and compensatory grants. What are these? These grants under various enactments are given to local bodies as compensation on account of loss of any revenue on taking over tax by the state government from local government. There was a tax whose revenue was being collected by the local bodies, right? Whose revenue was being collected by the local bodies, right? This tax, and the revenue was being taken by the local bodies. They were using it. Now, due to a certain new enactment or a change in the modus operandi, the tax is now being collected by the state government. Now, the tax has been taken over by the state government, like in the case of GST. So, if you have read GST, you might know about there is a special enactment, compensation, GST compensation to states for 5 years, which are going to get completed this year, 2022. 2017 GST was enacted, 2022, 5 years. Center had proposed to compensate the states for the loss of revenue they would be incurring just because many of the taxes were subsumed in GST and they were incurring losses because of not able to collect those taxes which were now being collected by the center. So they will compensate to the state. In the same way, some taxes which have been subsumed, merged into other taxes, and now they are being collected by the state government. They are forming a part of the revenue of the state government. Local bodies will be falling short of their revenue and the states would compensate them for this loss. These are known as statutory and compensatory grants. Okay. Now, how do these bodies work, local bodies? So their financial administration is carried out in 3 different parts: budgetary procedure, control over expenditure, and accounting system. So what is budgetary procedure? The main objective under budgetary procedure is to ensure that funds are raised and monies are spent by the executive departments in accordance with the rules and regulations and within the limits of sanction and authorization by the legislature or council. If they have made their law, local bodies law, any law made by them, passed by them, or any decision or work taken over by them, then they have to make sure that the funds are raised properly via way of taxes and other fees and cess, and that particular fund is being expended as per the rules and regulations only within the limits of the sanction. If 5 lakhs is the upper limit for this particular kind of work. The work has to be completed within 5 lakhs and not beyond that. It could be less than 5 lakhs, but not beyond that. And authorization. It will be properly authorized and sanctioned. Budget preparation is usually the occasion for determining the levels of taxation and rates and the ceiling on expenditure. So, to control the expenditure, put ceilings on expenditure, and what level of taxes do they require to collect from the local people. Municipal budget formats. So, every municipal has their budget format. It varies from state to state. Punjab would have a different, Haryana would have a different format, Rajasthan, Tamil Nadu, West Bengal, they all would have their different formats. They will vary from state to state. Okay. And there are variation between the municipal corporations and municipal councils as well. There is no strict separation between revenue and capital items. So local bodies don't differentiate between revenue and capital items. Usually there is a head called extraordinary items, which covers most of the capital transactions. So whatever money they raise through taxes, whatever money they spend, there is no differentiation between what is revenue, what is capital. They only have a head by the name of extraordinary items, which usually covers most of the capital transactions. Under this head, there is no capital and revenue head. There is this extraordinary head, which covers extraordinary capital transactions, or usually all the capital transactions. A number of special funds, for example, funds for roads, or in some cases, separate budgets for specific municipal functions like education of the persons involved, education in district schools, water supply, sanitation, transport, electricity do form a part of the budget, these special funds. That is a budgetary procedure. You budget. What is the money we require to raise and what would be expended? If there is any gap, how do we fill the gap? Then we have, how do we control the expenditure? So in the system of financial control existing in the state and central government level, there is a clear demarcation between the legislature and the executive. The persons making the law and the persons responsible for implementing the law. There is difference. The parliament, in the central government, the parliament makes the law. The ministers and the different bodies, they are the executive authorities. In the state level, legislative assembly, the laws are enacted in the legislative assembly, and the ministers and their departments, and further their executives, the IAS officers, right? The IAS officers, they are required to execute the laws. Their offices. The integration of legislation and execution powers in the municipal council makes it difficult for its executive to function as its inquisitorial body as well. Inquisitorial means different from independent. So in the case of local bodies, the persons making the laws are almost the same persons which have been enshrined with the responsibility of getting it implemented. The municipal councillors, in their meeting, the municipal council passes an enactment, passes a law, and the municipal councillors and the other people in the council, they have to get them implemented the work. So there is integration of legislation and executive powers. Moreover, the separation of executive powers and functions in the municipal governments cannot accommodate the existence of an independent finance officer responsible to the municipal council or its executive committee. It is not feasible actually to separate the function of legislation and executive so that there is an independent finance officer who is taking care of the finances and everything under expenditure control. So they have to take care of it themselves. So what is in that case, external audit by state government is the only instrument which controls municipal expenditure. The states get the audit of local bodies, the municipals conducted. So it is the state government, the officers at the level of the state. So the state governments comes out with the empanelments. People who are eligible, they apply for this and they are empaneled, and the state government gets audit of these local bodies conducted, external audit. And regular revenues and expenditures, they are generally delegated to municipal commissioners, MCs, for their wards, right? Municipal commissioners, their wards, that this particular wards require this much of budget, the roads are really in a bad condition, and this particular ward has a park in their area. We need to we need to upgrade the park facilities for the people, for a walk in the morning, for children to play. Everything that is covered, that is with the municipal commissioners, and funds are sanctioned from the municipal council. This is how the expenditure is controlled. They are the one who make the plan and then execute it. So it is only with the state authorities to get their audit conducted and check if there is any weakness in controls, or the targets are not being met, or if there is any wasteful expenditure. Municipals usually follow the cash system of accounting. We all understand the difference between cash and accrual system of accounting. Okay. Fine. So municipals usually follow the cash system of accounting. So what are the objectives of audit of local bodies? Reporting upon the fairness of the content and presentation of financial statements. Completely fine. Strengths and weaknesses of systems of financial control. How is financial control implemented? Who is the person responsible? Are they able to control the expenditure properly? What are the strengths and weaknesses? Are they making proper notes, books, whatever be the formats? Reporting upon the adherence to legal or other administrative requirements. Whether value is being fully received on money spent. So money was spent on making a road, right? Money was spent on constructing a road in that particular ward. Whether value is being received, or after one season, after one monsoon, the road comes into under a shabby condition. The roads are full of potholes and everything. So whether that value is fully received or not. This is the objective of audit of local bodies. Detection and prevention of error, fraud, and misuse of resources. The general objectives of audit in that particular case. Audit program. So audit program, appointment of auditor, the external control of municipal expenditure. The external control of municipal expenditure is exercised by the state governments through the appointment of auditors to examine municipal accounts, right? I'll come to it, Ria. I'll come to it. However, the municipal corporations of Delhi, Mumbai, and a few others have powers to appoint their own auditors for regular external audit. So Delhi, Mumbai, and a few other metro cities have the power with themselves to appoint their own auditors. Otherwise, usually in all other cases, 95 to 99% of cases, it is the state government which appoints auditors to check the accounts of their municipals, whether municipal corporations, municipal councils, the cantonment areas, the notified areas, or the panchayats. What is the auditor's area? The same thing which we have done in the previous slide, the fairness and contents and presentation, the strength and weakness, adherence, whether value is being fully received or not, to detect errors and fraud and misuse of resources. The auditor should ensure that the expenditure incurred conforms to the relevant provisions of the law. Expenses and expenditure has been incurred as per the rules and regulations laid down in the law governing the particular work of the council, accordance with the financial rules and regulations framed by the competent authority in the municipal council. The person who is in charge of framing rules for that particular expenditure, the expenditure has been made as per those rules and regulations. All kind of sanctions, whether for a particular ward, for any of the projects, whether it is construction of roads, maintenance of roads, overhauling of roads, or overhauling of any department, or installation of street lights, anything, they should be properly sanctioned. So the auditor should ensure that all types of sanctions, either for special works or general works, are accorded, means properly sanctions are given by the proper competent authority. Only then the work has been executed. He should ensure that there is a provision of funds and expenditure is incurred from the provision, and the same has been authorized by the competent authority. So funds have already been provided for, a provision has been made for installing street lights on the main road of the city, and funds have been expended for that particular purpose out of that provision only. As an auditor, I understand this point, and I have to make sure that it has been done in this way only. The funds have been utilized by debiting that provision only. And I have to tell about the budgeted performance, the different schemes, programs, and objectives. These were the budgets which were laid down before the house of the council in the meeting, and whether after completing that work, whether the performance expenditure has been incurred as per the budget, and whether it is running economically and getting the expected result. For example, in some areas, the local bodies are they are coming out with the initiatives of Roti Bank, Apni Rasoi, and all this developmental work, social welfare works. So they have to make sure, the auditor has to make sure, there has to be assured that the particular work has not been overexpended. The funds have not been overexpended. They have been expended out of the provisions made for that work, and there was no wasteful expenditure. So this is what was the audit program for local bodies. And Ria asked me, what is the meaning of inquisitorial? Where was this word? Inquisitorial. Okay, let me get to the word. Where was it? Okay, meaning. Okay. I got lost, Ria. What are you telling me? Inquisitorial, where was this word? Okay, here it is. Okay, so it says, the integration of legislation and executive powers in the municipal council makes it difficult for its executive to function as its inquisitorial. Inquisitorial body means a person who questions, a body who questions. How was this work done? What is the problem? What are the issues? Why is this work not done in this manner? As an auditor, I ask, this is the set control measures. This is a set program, the modus operandi of doing this work. Why is it being done in a different manner? What is the reason of deviation? So inquisitorial means questioning mind. If I am doing that, it's like the maker and checker thing. So if the maker and checker are the same, who is going to question? So inquisitorial body means a person or the body which questions, which raises doubts. That is inquisitorial. Fine? Okay. Found. Thank you, Sandhuji. Thank you. Somewhere from around the maximum marks this chapter has been asked in any of the exams was, I still remember, 13. No, 13. It was 8 or 10. So suppose somewhere you can expect 6, 10, 10 to 12, 15, somewhere around this. Any other doubts, please? We are done for the day. We have covered common points, the intro to this chapter, common points, sole proprietorships, partnerships, LLPs, and local bodies. In the next session, day after tomorrow on Wednesday, I'll be taking up government audit and non-government audit. Fine. So I'll request you people to go through your modules as well. I'll upload these notes as well. You can refer them and practice the questions if you find any in the if you are able to spot questions what we have related to what we have done today in your module, and then come up with doubts in the next session. I've also given you a homework of those 3, 4 words: compoundable offenses, bailable, and those prosecution and everything. We'll discuss that. Okay, in the next session, day after tomorrow. Take care till then. Good night. Bye bye. Yes, Ramji. Conclude.